And welcome everyone to another Smart Money Circle episode. I'm Adam Sarhan. With me today is Ilya Zlotnik, who's the wealth advisor partner at Vivaldi Capital Management with approximately 6 billion in assets under management. Ilya, thank you so much for taking the time and welcome to the Smart Money Circle.
Thanks so much for having me here, Adam.
Ilya, I always like to begin. Can you please tell us your story and how you got to where you are today?
Sure. I went to Indiana University. I studied, actually, I remember this. This was junior year. I didn't have a major. I just got into business school. I tried twice to get into Kelley School of Business. I was very excited. And then I called my mom. I said, "What should I major in?" I'm thinking of marketing. And she says, "That's a bullshit major. You should do finance. That's more serious." And that's kind of how I led me to the financial route, graduated. I think surprisingly, we have a great internship program and we have some great interns that come in that we end up hiring. I never did an internship. I waited tables throughout college, graduated, didn't really know what I wanted to do, had about $50,000 of student loans, and started interviewing at a bunch of jobs. I was interviewing at a job that had me sell paper, and somehow I met one specific person at Ameriprise Financial that was heading up the O'Hare office in Chicago at that time. And we connected. He sold me on becoming a financial advisor, which at that time was reaching out to friends and family and trying to sell them A-share mutual funds and insurance. And I was there for about 18 months. The training was unreal, really taught me how to talk to people that I wasn't accustomed to talking to. And that's how I got my foot in the door into the world of investments and wealth management.
Wow, what a great story and a very smart mother, by the way. So that's a good
Very smart
advice.
mother.
Help you get where you are today. So let's talk about the business. Please tell us about Vivaldi. I know you're big on certain things, so I'd love to hear all about it.
Absolutely. We started our business now about 13 or 14 years ago. We built our business very differently than I'd say a traditional wealth management firm. We started with a focus on research within the alternative investment space. This was a way that the original founders and us as partners had traditionally invested our capital, and then just friends that and investors that were high net worth, ultra high net worth family office wanted exposure to at that time. And so we started initial focus on private equity, real estate, hedge funds. That was our niche. Um, and over the years, we built out our research efforts. We started to kind of diversify into other areas of more traditional wealth management. But really the core and the ethos of the business is really being able to provide clients the ability to access those strategies that historically have been more difficult to access. And looking back at it now, we were really a first mover in the wealth management space to be able to provide these solutions. Nowadays, everybody's talking about it, right? But we're really proud of the firm that we built. Like you said, about $6 billion in assets under management, growing nicely with offices across the country, and now being able to provide access to hard, difficult to access alternatives and private market investments, along with traditional wealth management, stocks, bonds, estate planning, and the traditional wealth management approach as well.
I love that. So let's go back to the early days at Ameriprise, and then you moved over to alternatives. Let's talk about
It
that
wasn't
transition.
right. It wasn't specifically to alternatives right away. I went to TD. Actually, the story is I had a friend that left Ameriprise. The manager that initially hired me ended up leaving, and he was the glue that held that business together. Also, it was '07, and the world was starting to fall apart, and it really fell apart in '08. I got lucky because I jumped ship and went to TD because I had a friend that introduced me to a manager at TD at the time, the downtown office. And TD Ameritrade was one of the firms that actually performed really well throughout the Great Financial Crisis. They were Canadian. They were attached to a Canadian bank. They didn't have the same exposure to mortgage-backed securities that a lot of the American banks and brokerage houses had exposure to. That almost ruined them, and in fact ruined a handful of them. So we ended up acquiring clients. We had a program called the Advisor Direct Referral Program at TD Ameritrade. So you had a handful of advisors that you could refer business to that needed more sophisticated investment solutions that we at TD weren't able to provide. Vivaldi joined that program in 2011, 2012. And all of a sudden I was like, wow, I was exposed to the world of alternatives. Before that, I had no exposure to that world. And to me, it was amazing. And then I met David Sternberg and Randy Golden and Mike Peck and Chad Eisenberg, the first four folks at that firm. And I referred a lot of business to them. We connected really well. I ended up leaving TD, finishing my MBA at University of Chicago, and they had reached out to me and said, "Hey, we're building out a new division. We want you to join." And that's how I ended up joining the firm in 2014.
Got it. No, makes perfect sense. Thank you for that link because I was
Yeah.
curious on the story there. That makes perfect sense. Okay, let's talk about risk management. So how do you handle risk and what are some mistakes you see people make with respect to risk management?
I think the greatest antidote to having a portfolio that's overly risky is proper diversification. There's an old saying that to build wealth, you need to concentrate, but to protect wealth, you need to diversify. And that's what clients come to me for. A lot of clients that come to me are already wealthy. They've sold businesses, they were successful real estate investors, successful traders, and they come to me because I help build diversified portfolios across equities, fixed income, hedge funds, private equity, venture, and real estate, as well as private credit. Because ultimately, the future is uncertain. Nobody really knows what's going to happen. A lot of different outcomes can happen, but you want to be able to have enough good ideas that could perform well in various environments to be able to protect clients' wealth over their lifetime and then over their multi generations as well is a big thing for many
So
investors as well.
can you say that again? To build wealth, it requires you to concentrate. How about the
Concentrate.
diversify side? Yep, the
And the
diversify.
to protect wealth, you need to be
To
able to
protect.
you need to diversify.
Okay, beautiful. Whenever I
Right.
get
And
a
the
question,
biggest,
go
yeah,
ahead.
right. That's important. I mean, that's an old saying, and that's kind of a motto that I live by. Um, and if I see some of the common mistakes that investors make, right now you see a lot of investors that are very heavy into technology, right? It's been a great win for them, and the trend has been unbelievable for a long, long time. But hey, listen, if you look back several decades or 100 years, some of the greatest companies that were around 100 years ago are no longer around today, right? So people have to remember that.
Yeah, that's really powerful. Even dot-com bubble, don't even go back 100 years. You
Yeah,
can
to
go
go
back
20,
25 years. Yeah,
25 years
exactly.
exactly.
Yeah. So, okay, that's a great point. So that's mistakes. How about timeless lessons you've learned along the way that you'd like to share with the audience?
Yeah, I mean, I think some of the greatest lessons that you could share with clients are just kind of what we talked about. Risk management is such an important part. One thing I've learned about this business is, and we talked a little bit about this before we jumped on the show, is it's not all about the numbers in this business. It's actually more about the behavioral finance of this business. It's being able to sit down with the client, and part of this is art, part of it's science, but a lot of it comes with just experience. And I've been doing this for 20 years. I've met with tens of thousands of people at this point, I feel like, and you kind of get an intuition of who that investor is and how they'll react in different environments. There are some people that understand that, hey, I can put most of my money into equities and be comfortable with volatility because equities are one of the best asset classes to invest in if you want the most tax efficient return, be able to compound wealth over many decades. And we build portfolios for them. And then some investors, the moment they see any volatility in their portfolio, they freak out and they're calling me. So we don't build those portfolios for them. We build portfolios that reduce volatility and provide much more consistency in returns. And it's being able to understand that client, or as an investor, being able to understand yourself and how you react in those environments. And sometimes it's easy to forget because for the past 3 years, we've seen nothing but up markets. So everybody feels like a genius, right?
Yeah, for sure. Everyone's a genius in a bull market. So
Yeah, that's right.
that's a great point. Let's expand about that a little bit. So some people can handle the volatility, meaning stocks go down, not just go up, and some
That's
people
right.
can't. And you have the intuition now after talking to thousands and thousands of investors. What are some tells that you look for to determine someone's risk profile, for lack of a better word,
Well,
or their
uh,
appetite for?
yeah, I mean,
Yeah.
it's one of them is just their level of sophistication. That's an easy one to see. If a client is not sophisticated and doesn't understand the mechanisms of the market, more often than not, they're not going to understand volatility. And in their mind, they're going to equate volatility with risk. And in some circumstances, volatility is risk, but in other circumstances, to sophisticated investors, volatility is opportunity. So that's one. fairly common telltale sign of that. Other things are just like it's interesting. This is more of just kind of my experience throughout the history of me in this business. I work with a lot of business owners, and you pragmatically, somebody that has built a lot of wealth in a business and having almost all their money for the majority of their life in that one individual private company, you'd think they're a huge risk taker, right? And they likely are, objectively. But what's interesting is because they know their business so intimately and they don't see the volatility of the value of their individual holding on a daily basis, they don't view that as risk. What they view as risk is putting their money in a stock market that they can't control. So even those people who are inherently the biggest risk takers oftentimes aren't comfortable with stock market volatility because they feel like they can't control it.
That's a really, really good point too, because you're talking about business risk, which is your own business. I can control the amount of ad spend or money I'm spending on advertising, the amount of outbound sales, hire another sales. You can control certain elements. If expenses are too much, you can reduce payroll, whatever needs to get done, you can make some adjustments there. But when you have your money in the stock market, well, actually, to your point too, you're not even looking at the daily valuation swings of your business. That's not even part of your purview as a business owner. But when you look at the stock market, you're doing that. You're looking at the daily P&L, your profits and loss every day. Oh no, the portfolio's down. Oh yeah, the portfolio's up, so on and so forth. And those emotions take over and they cause you to make emotional, not rational decisions, if I understand you properly.
Yeah, and it could, and then what it ends up doing is it bleeds over into people's personal lives. People lose sleep because market's down and they're freaking out. I'm not going to have enough money for retirement. And that's another interesting psychological thing that I see is people with immense amount of wealth still always worrying about not having enough money. Even though I always show them, because we go through a pretty in-depth planning process and there's projections. I'm like, it's very difficult, nearly impossible for you to ever run out of money. People still worry about that regardless.
Yeah, that's a good point. Is there a certain number that, because you manage 6 billion, is there a certain number, maybe over 10 million, 50 million that you see, hey, that pressure subsides? Or is it no matter how much they have, they still have that worry
There's
based
certain
on?
people, no matter how much they have that worry. Part of that worry has to come with that they spent their entire adult lives having more money come in than go out. So they're constantly saving. And there's something that happens psychologically when you fully retire that changes that no matter how much you have, because you don't see the money coming in and you're not working for it, and you see more money going out, it is a psychological barrier that a lot of that not all investors, but some investors need to overcome to become more comfortable in retirement. And frankly, a lot of the people that I work with love what they do and they never retire.
Yeah, no, I fully get that. I mean, Buffett's 93 now or 94 or
Yeah,
5, whatever it is, and he's still jamming. So yeah, God bless. So
yeah,
okay,
yeah.
let's earlier you mentioned volatility can be an opportunity. Can you please expand about that or explain that?
Yeah, now this year is a perfect example. In was it March or April? Trump comes out and it's Liberation Day, and he tells the whole world that he's increasing tariffs on everybody, and the stock market drops very quickly in a very short period of time. To me, I saw that as a great opportunity. And we reached out to clients. The way we build portfolios for wealth management clients is we build them based on asset allocation. So we have target allocations for equities, fixed income, hedge funds, private equity, and real estate that we build in tandem with clients. And if we have a target allocation for equities and all of a sudden the equity portfolio just went down 20%, well, all of a sudden they're underweight equities. That's a great time to rebalance. So to me, that's a huge opportunity to be able to add more to an asset class that, in my opinion, is cheap based on headline news. So the only thing I wish is we added more. I didn't realize how quickly things were going to turn around, literally overnight.
Yeah, join the club. So
Yeah,
I think I think last time I checked, the Nasdaq's up, or the Nasdaq 100's up like 45 or 50% since the April low and into the summer, or
wild,
something crazy. Yeah.
wild.
All right. So thank you for that explanation because the audience is going to ask the question, what is volatility, opportunity? What does that mean? Thank you for explaining.
Sure.
Next question for you. Let's talk about leadership. What makes a great leader, and what are some lessons you've learned about leadership that you'd like to share with the audience?
Yeah, absolutely. Um, yeah, I run a team that I think is their high performing team. And one of the things that I think is important as a leader is you want to lead from the front and you want to lead by example. So it's not about telling, it's about doing. And You hire people, you hope you hire good people, and you hope they can keep up and run fast. And if they can, they're great. You focus on allowing them to make mistakes, but being very proactive and having communication with them in telling them, hey, this is what you did. It's okay to make a mistake, but this is what you need to do moving forward. Because from my perspective, the way I've learned and gotten to the place that I've gotten to is just by going out and making a mistake and having and reflecting on that mistake and making sure I don't make that mistake again, right? And constantly challenging myself. And that's how I want to have my team run. I want them to go out and experience different types of um, things in the business firsthand by going on and having these meetings versus just sitting in an office and just doing my work. So I think that's the best way to, and you give them a lot of opportunities and challenges, and that's my perspective on leadership.
I love that. That's a really, really good line. Lead by doing, not by telling. So that's really, really good. So let's talk about adversity, the other side of that. To become successful, people have to overcome adversity. How do you handle adversity, and what are some obstacles you had to overcome along the way?
Yeah. Well, maybe one of the greatest adversities that I had early on in this business is just my sheer fear of public speaking. And this reminds me of like a Jerry Seinfeld like stand-up bit where he says that more people are afraid of public speaking than dying. So you'd rather be the person in the coffin than giving the obituary at the funeral. Um, so I mean, one of my biggest things that I had to overcome is just having these types of conversations. Or I do a lot of public speaking now. I have my own interview series where I'm in front of camera. I absolutely love doing it now. It's fun for me. It's exciting. But for at least 10 years, going into a client meeting was nerve-wracking. Doing a public presentation was nerve-wracking. So for me, a lot of it is just, hey, you have a fear, go do it and keep doing it until it's not a fear anymore. And it's worked out for me.
Yeah, usually that's how it is. Where JFK was it who said, "You have nothing to fear but fear yourself," or Roosevelt, one
That's
of those
right.
guys. Yeah.
Yeah, yeah.
All right, love that. So next, final question for you. What is the best piece of advice you like to give the audience or your 30-year-old self?
Absolutely. Well, I feel very fortunate to be in a business that I absolutely love, in a business that's growing and will continue to grow. I think being in the wealth management space is a great space to be in the next couple decades, and then also being with a group that I love working with. So I think the best piece of advice is find something you love doing. Make sure that you have talent to do it well, and because that's important. You could work as hard as you can, but if you're in a space that you're not necessarily talented in, it might be hard to be great or good or really enjoy it. Make sure you're working with people you enjoy working with and you trust, and make sure you're in an area that is going to be a good area to be in, and will have growth for the foreseeable future.
I love it. Well, Ilya, thank you so much for taking the time, and hopefully we'll have you on again soon. This was great. Congrats on all your success.
Absolutely. Thanks, Adam.